Hi, it's Martin from the Accelerator team at Robson Laidler. This is our weekly podcast about business stuff, where you can pick loads of tips up and ideas about the things you should be thinking about in business. I'm joined again by Jack from the team. Hi Jack, how you doing?
I'm good, thanks. You alright?
Yeah, I'm good. So new year, new challenges, but let's not get carried away. What are the four things that we should be doing in January or the start of the year? So Jack, can you just recap what those things are, please?
Yeah, so first and foremost, we need to be looking after our people. Secondly, writing to our key customers or getting in contact with them. 3, we need to be updating our cash flow forecasts. And 4, and probably most important for you, filing a self-assessment tax return.
Yeah. So 31st of January is the deadline. Most people in business need to do that, whether you're self-employed or you've got rental property or you're a director. You've normally got a tax return. Most people leave it at the last minute. We wish they didn't every year, but it's just what happens.
You just get a little bit more tired every year, do you?
Yeah, which just saps a little bit more of our souls away every year. But yeah, so there's a tax return. It's due by the 31st of January, technically. There's actually this year, because of everything that's happened with the economy, just like they did last year, they've actually extended the deadline to the 28th of February. One important thing though that people are going to forget here is you've still got to pay the tax at the end of January. So you might be thinking, pressure's off, let's not bother doing that, let's just kick it down the line. But if you do that and you realise that you haven't paid your tax, you could incur interest charges. The interest isn't eye-watering, but it's better to keep your record clean. Just as a throwaway, if you're something like a subbie and you're within CIS, you only keep your CIS registration on the premise that you keep up to date with things. So we don't know how they're going to read this. They might say, well, your return was in by the end of February, but you didn't pay your tax. And non-payment of your liabilities can actually be one of the things that make, let's say, HMRC strip your gross status off you, for instance, within CIS. So I think we'll park it there. There's no other major deadlines, but get your return done.
Yeah, we've got a bit overexcited there. We jumped straight to 4.
That one's the nearest one. So if you haven't done that now when you're watching this, get away and do that.
Switch off
press
and
pause, come back and pick this up. Right, so let's talk about the biggies though. So people, what's happening with people? So in this regard, we're talking about the teams that work for you, with you. What's the major thing happening at the moment, Jack?
just the job market in general over the past 18 months. Well, since COVID's really hit, it's gone very, very erratic. A lot of people have got a new clarity on what they want to do with their life, and suddenly flexible working is very important to them.
Yeah.
And they're not so willing to work in conventional ways.
Or put up with the same things they used to put up with.
Absolutely, and it suddenly becomes good staff come at a premium, and there's so many job offers out there. The supply for jobs at the moment is so high, and demand is so low.
Yeah.
So it's a case of, if you've got staff that you really value, it's making sure that you're absolutely addressing all their concerns and staying in touch with them as much as possible. So there's no reason for them to stray and look elsewhere.
Yeah, there's a catchy name that neither of us can remember. It's like quit your job Alopolis or something, isn't it? It's like an apocalyptic kind of term, but there is a lot of uncertainty in the job market. I know from speaking to some recruiters, they've got some really good jobs that they're trying to fill, which in the past they would have just filled all day long, nice and easy. But there's been a shift in whether people are expected to be in a certain place to do that job, whereas people have proven, or many think that it's been proven, that they can just do the job remotely and there's no reason to go in. There's a lot of things like that have changed. But also it's always worth remembering that one of the key things in looking after teams is people don't normally leave jobs, they normally leave managers.
Yeah.
So if you're above a team and you've got a lot of churn, it's probably a good time to have a bit of like self-reflection here, isn't it? Mm-hmm. Why are people leaving you? They're not leaving the job, they're leaving you.
Yeah, we talk about looking in the mirror before you look out the window, kind of thing. It's certainly interesting, and kind of, I've been speaking to a lot of clients who've been using the Kickstart scheme, a lot of local clients, and it's quite interesting that they've been in contact with various job adverts for positions for sort of younger people. That's what it's obviously aimed at, and there's so many positions that they're not even actually taking on any more job adverts. They're saying there's too many jobs out there.
Right.
For younger people on universal credit, but there just doesn't seem to be a huge amount of uptake there.
What do you think is driving this then, Jack? Because I'm sure anyone watching or listening to this will remember the whole thing about the lorry drivers. Well, you know, we know what it is, but the reality is there was 100,000 vacancies, 10,000 Poles went home, paraphrasing.
Mm-hmm.
But there clearly wasn't, the job clearly wasn't attractive enough as it was to encourage people to leave other professions to go into it.
Mm-hmm.
Do you think there's been like an eye opening on certain jobs where you kind of go, well, I used to put up with this because that's what I had to do. I've tried something else during, you know, lockdown, and I don't want to go back to where I was. I know I speak to people who run cafes and restaurants, and they're saying they're struggling to get. There was always students who were just happy to do 3 shifts at the cafe every week, and they can't get them now. They're saying, oh well, we don't want to come back to this. We want to do something else. Do you think there needs to be a rebalancing of what the offer is to actually drag people into these jobs?
Yeah, I mean, suddenly the offer of minimum wage and no benefits isn't attractive to people, and there's a certain expectation now for employees, you know, that they get a little bit more, and there's a reason to be there, and it's difficult because you can see it from both sides in the sense of you have an employer who may have a warehouse, you know, e-commerce for example, and they're like, well, I just need someone in the factory to pick orders. Like, it's not rocket science, but you know, it needs to be done. But on the other side, it's like, well, yeah, but still, I'm not wasting. I value my time over what you're trying to pay me to do this, because, you know, as a person, I expect more.
Yeah, it's funny because everyone has got a job where you could say, do you fancy doing this? And you go, that you literally could pay me to do that job.
Mm-hmm.
It seems like there's more of those jobs now.
Yeah.
And it's ones where historically you couldn't pay me to pluck chickens. Nothing against chicken pluckers, but I don't think I could physically do it. I'm too probably. Sure, if I had to do it, I would find a way. But you know, there's jobs where you just kind of go, you can't make me do that. You couldn't pay me enough money.
Mm-hmm.
Do you think people are just kind of accepting that money isn't everything? It's just, well, I want to feel like I'm doing something, part of a team, part of a wider goal, not just.
Yeah, I think purpose comes a lot into it, and I think people value themselves more on just money now. And we've had some blog posts out there last year about kind of time millionaires, so people that really value their free time more than anything. So it's like, I don't care that I'm not getting paid as much as I could do, but it means that I know for the fact that I can switch off my computer at 5 o'clock, 4:30, whatever, and know that I'm not going to have to open my laptop again until 9 o'clock the next morning, and I know that my weekends aren't going to be interrupted. Yeah. My holidays, I'm not going to be checking my phone every 15 minutes to check there's some emails come through.
I think it was one of the Scandinavian countries actually banned.
France, actually.
Was it France?
Mm-hmm.
Banned ringing employees out of hours or something like that, wasn't it?
Or picking up emails.
Checking emails out of hours, yeah.
Yeah, they've
really
got some.
Interesting, but.
I think they also, by law, you have to leave your desk actually in your lunch break. You can't actually eat lunch at your desk. You have to physically get up.
Their keyboards must be so clean.
Exactly.
Because I think that's the number one reason that keyboards fail, isn't it? It's crumbs.
Crumbs everywhere.
Yeah, 100%. So it's interesting as well, because with this, it's not just teams where we're seeing this. It's not just employees and employer relationships. This happened with property as well, didn't it? There was. I mean, I haven't witnessed it here because we've all got a bit more space around us, but certainly in the more dense cities and in the centre of London, people moved out of these expensive flats with not even a balcony. Mm-hmm. Like, hold on, if this happens again, we need some green. We need to be able to sit in our own gardens.
Yes.
And there was this like massive shift. That's all that's happening really, but just in the workforce, isn't it?
Yeah, definitely.
Going, well, you know, you've got the small expensive flat with no space is the job people used to do, they don't really want now, and all of a sudden other things are more attractive.
Yeah, absolutely. And yeah, on the property stuff, we certainly had a lot of our clients who noticed it. And I used to watch Country File, and again they did a session, a program up in the northeast where that they've talked very much about that. But you're right, it's very comparable in terms of a job where you can consider a high pressure job, big bonus, big salary as your kind of London flat, as opposed to maybe actually I want to have a bit more free time, you know, maybe even work in a local shop, for example. And
take a lower mortgage and a lower wage, have the same, if not better, quality of life.
Yeah.
I think there's possibly also then just a final little thought on this. I think obviously a lot of people had to try new things because most people don't like change for no reason. This forced a lot of change, which has possibly give people a new, it's emboldened people with a sense of, well, I've already changed, I'll keep changing, or I'll try it again. But also there's a lot of people who's kind of like, well, you're on furlough, you can't do your job. A lot of these jobs they were stopped altogether. You were allowed, of course, to try other things. So a lot of people took part-time jobs in supermarkets, but just as many probably thought, well, I'll try that online business I've always fancied. And if that worked, of course, that person wasn't there to come off furlough and back into their job anyway. They'd already left and quit.
Yeah.
And then there's not necessarily someone else who's just ready to take their job, is there? So I think, it's going to be interesting.
Yeah, certainly chancing our arm during furlough and starting up a new business. I mean, that probably links with part 4 because my sister's just come with me with her tax return saying I need that done for that.
Tell her it's too late, Jack. Yeah. We're not taking
Well, I'm charging her top dollar for it.
Yeah, she's got the family premium, has she?
Oh yeah, of course.
Excellent. So this brings us on to customers then, is the next thing. So what's the key takeaway on customers, Jack? What do people need to do with their customers? Why is this important?
It's important to touch base with them, and good sales are generally linked to good customer relations, and just taking that time at the start of the year to pick up the phone and just catch up with them, try and understand their problems and their pain points and see how you can help. Almost bounce their ideas off what you're offering them. How can we improve what you're offering to them, and having that conversation. Ultimately, that's going to lead to potentially more sales. Great, but at the very least, it's very much you've improved that relationship. A small amount, and we always talk about it here that you never get told off for picking up the phone to a client. They're never going to say, why the hell have you spoken to us? Because at the very least, you're touching base with them and you can answer any burning issues.
I'm actually quite busy, Jack. Do you mind if I catch up another time?
Yeah.
But they'll never go, how dare you ask me how I'm doing? It's never happened, is it?
No, exactly. And I can't see any industry where that would be an issue.
Yeah. Because I think the important thing there is, we've just mentioned that people's teams are changing. We mentioned the shift in property. These things are happening everywhere, and it's very likely that your customers' expectations from you and your expectations of them. So customers also works with suppliers. Yeah, you could just as equally say check in with your suppliers. Make sure they're okay. If you've got a key supplier who you get all of your stuff from, they're just about to pull the plug on that. You need to know that, don't you?
Yeah.
So you're, whether you're on the customer end or the supply end, it's worth just having that expectation check in, isn't it? And say, what's changed your end? All right, your team's all dispersed now, right? That's going to change the service. In which way? Right, got it. Well, that's handy because I'm changing that way anyway. It's just like a double check to make sure that you don't. Well, you can either rely on the same relationship you always had, or you need to, I suppose, prepare for change, don't you?
Yeah, and I'm dealing with a client at the moment where that relationship between the customer is broken down. Not necessarily in terms of she's still getting more and more work in, but the expectation of how she turns around this work, it's getting more and more difficult. Then they're starting querying some of the big pieces of work she's doing, where she's spending a lot of time on weekends, evenings, working late into the night, and then she's charging a premium for this, and they're querying it, and they're questioning the value of it, and this all stems from the fact that she's not able to communicate with them properly because they refuse to pick up the phone to her when she calls.
Right. Yeah. We've all got clients like that, don't we?
Yeah, we certainly do.
So what can people do about this then? Because they might speak to their customers. I suppose it's too big a topic really to go into and really nail, but you got to make sure your customers still want the thing you were doing for them in the same way you were doing them. You need to make sure that you can keep delivering that thing. So you might want to go backwards, check your suppliers, check with your team, make sure your team aren't going to change too dramatically to
Yeah.
Because you could be a business that is basically a one-trick pony, and the pony might be just about to leave because they've started an online business during lockdown. So you've got to make sure all the pieces are all still aligned, haven't you? There is only so much you can do, though, isn't there? Your customers might be shifting, and you might then just need to find a new customer base, which again is part of the continuing challenge, isn't it? If your customers just don't exist anymore, you can't just keep flogging it.
Yeah, I suppose having that conversation with a customer early doors and finding out as early as possible that, to be honest, we're actually moving in a different direction and we're not going to be using you as much, or
nobody's buying the thing you make anymore, so and then, we don't need to buy it from you anymore.
So it's great. It's like, well, great then. At least I've got maybe 2 months where I've built some stuff. I'm waiting for that money to come in, so I've got a bit of a stopgap. I can go out and find some new customers, but it's better than suddenly just the orders dry up and you just don't know why.
You don't know why at all. Yeah, I think I mentioned in an earlier episode. I think the book's called something like "Who Moved My Cheese," and the idea is that it's when you've got a pile of cheese, you might think, well, I don't need to look for any more cheese. We're okay. But if that pile stops getting filled one day and just then starts depleting, you can either sit and think, well, it's all right, someone will start putting more cheese there. But if you read the book, this makes more sense. But if you've got a customer base that you just keep getting work from, it's quite a dangerous position just to think, well, that's all I need to do. You should never be too reliant on one source or one type of customer.
Yeah.
So even while the going is very good, really successful businesses are always just slightly dabbling in other areas just in case of it. So you can then turn that up if they need to when the other one turns down.
Yeah. I forgot to mention that they were mice when we were talking about the cheese.
Were they not mice? Were they not?
They were. I just don't think you said that.
I was going to say I thought they were mice. Yeah, it's a story about mice and cheese, but it relates to finding.
I mean, there are a lot of people that do love cheese that much that they probably would defend a mountain of cheese.
To be honest, the cheese diet for weight gain is well known. But within all of that, you can probably just put this down to like one or two words, isn't it? It's like openness.
Yeah.
In a proper communication with your customer base, isn't it?
Yeah.
If you haven't got that, it's going to be hard, no matter how well you prepare. And if you have got that, that will probably mean you can be forgiven for not doing exactly what they want. But if you've got the open relationship, you've got a lot more scope for time and a bit more forgiveness from the customer, haven't you?
Yeah, and also, and we'll probably cover it in the next bit, is about pricing as well. Like, suddenly you may use this opportunity to look at your pricing and go, oh, I'm going to have to put my prices up by 10%. That's going to be a hell of a lot easier process if you know your customer well and they understand and they value you as well. If
they know the challenges you're going through and why you've got... I mean, anyone who isn't planning a 10% increase in the next year, it is probably not keeping an eye on what's happening, and we'll come on to this because we'll move on to cash flow then. Most businesses are starting this new year and thinking, well, we've already got all of these challenges we've already just been talking about, whether it be cheese or whatever the equivalent is in your business. But cash flow is an interesting one because pretty much every business, apart from the very smallest, will be looking at increased cost of NI for employees. Inflation's at something like 5.5% as we record this. So
minimum wage going up as well.
Minimum wage increase, wage inflation as a result of inflation, plus the minimum wage knock-on effect. Utilities, I haven't seen anyone with quite this kind of increase, but all we hear every day is 50% more for your energy from 1st of April or whenever it is.
Yeah.
So, we're not too energy dependent, but a 50% increase in our energy cost is a reasonable figure. We've got 100 people sitting in heated, lit rooms with computers and printers. All those things have to be passed on. So most people probably need a brace for probably 10% increase in costs.
Yeah.
Because if you're not putting your costs up, you're going to be losing money, I think. So cash flow, we've talked about this in previous episodes, we've talked about pricing, etc. But again, it's about keeping your finger on it, isn't it? You've got to know your numbers and be able to accurately project what's going to happen. Is that a reasonable thing to say?
Yeah, across the year as well. It's not a snapshot. It's not like my cash flow is okay now, but when considering everything else we've talked about so far, about talking to your customers, what effects is it going to have on your employees? Am I looking at paying out some bonuses? Am I looking at some pay rises in order to retain some staff? How is that going to affect you, not just now, but also in 12 months' time?
Yeah.
And then that will affect the decisions in terms of price rises, etc. But it's constantly monitoring. It's always thinking about the cyclical nature of your business. So if you're generally, January is quite a quiet period for a lot of industries, and then if we're maybe pushing up towards like summertime, if you're like if you're a fashion brand or something like that, that's generally when you peak again, drop down, pick up again in December and in November. So it's always about thinking about your unique cycle and when are you going to need more cash at certain points, when you're going to be buying stuff in, when is the bulk of your cash going to be coming in, looking at how good am I at recovering my debt, how am I using my credit terms effectively, all of these things. It's modelling that basically at this point for the next 12 months ahead.
Yeah, because there's all the, and it might be we'll talk about these in more detail at some point, but there's all the boring things like ask for your money as quick as you can.
Mm-hmm.
Classic trade will do a job, forget to raise an invoice for 6 weeks, realise they've got no money to pay suppliers, send an invoice and ring you up before you've even had it to say, will you pay it? Just raise the invoice when the job's finished. Basics. Asking for your own money, chasing your debtors. It's not impolite to ask for your own money.
Yep.
And again, it's like, I don't want to jeopardise the trust of the relationship I've got with. Well, there's obviously no trust there if they're not paying you. It's not a proper relationship anyway. So you need to chase that down and get on it. But it's interesting you just mentioned there. You said you'd have to pay bonuses to keep staff. Staff in jobs that used to get filled easily are now having to see. So we're seeing an increase in the cost of the wage for lorry drivers. They don't want to work for the same things they used to get. And if you want to see that job exist in the future, so if you're struggling to get part-time staff to work in a cafe, you say, well, I can't afford to pay them anymore. People still want to eat. So put your prices up, pay your staff a bit more. But you have to have a way to work your way through that to do it, haven't you?
Yeah.
And the other thing is as well, of course, is we've mentioned increasing in costs generally, but also we talked about, to go back to my cheese analogy because I really like it. But if you see a shift away from something, you might, if you're a manufacturing business and people aren't buying tables anymore, you think, well, I'm going to have to start making chairs. All right, well, I need a machine to put casters on stuff now. I don't know where I'm going with this, but you're going to have to change the way your business moves. How much is that going to cost? If you've got to retool a factory, that's a big thing.
Yeah.
Can you afford to shut down for 2 weeks, buy all the expensive stuff, find the new market to sell your new product to? These things don't happen overnight.
No.
And take extreme care of planning, don't they?
Mm-hmm. Yes. It's very rare that this happens on a whim and you get it turned around straight away. Yeah, and the cost of machinery comes into it, and whether if you can afford to buy it outright, or then suddenly it comes down to like hire purchase and there is bits of finance. Again, that needs all to be built into your forecast, and because a lot of people see kind of a finance agreement as great. I don't have to pay it all now, I can pay it all later. But then it's like, well, maybe further down the line when you realise what the interest rate is, and suddenly you're crippled by massive interest payments.
Well, one of the other things as well, which is quite topical as we record this, I think there's just been an announcement about, was it 3.4, 34 billion quid's worth of things like the bounce back loans and recovery loans have just been written off because of fraud. But of course, if you took a bounce back loan, you probably thought, well, we're doing all right, because you were depleting the bounce back loan that you got with relatively little effort. It took you half an hour to get that off the bank. Where's the next 50 grand coming from, though?
Yeah.
Has your business picked up enough to not only recover the lost trade, but also give you enough breather to be able to repay that bounce back loan? So you've got to find 600, 700, 800 quid a month to pay a bounce back loan back. Is your business has to be stronger than it was before the lockdown, not just back to where it was. And I think a lot of people are making that mistake as well, and they can only make that mistake if they're not planning their cash flow.
Yeah, I mean, the simple exercise is basically, what's your cash balance now? Take away how much you borrowed, and that's your true cash position if you hadn't taken the loan out in a roundabout way. So suddenly
So
you're
if you're
going
sitting
like,
on no cash now,
yeah,
you've got to find 50 grand.
mm-hmm.
Yeah, you're not sitting on zero at all, are you?
Yeah.
You're down, yeah.
But if you had 55 grand in the bank, and you're like, well, I normally have 5, so nothing's changed, but it shows you've still got that 50 grand set aside that you can pay it.
Yeah.
So it's just simple things like that. I'm just trying to understand what your true cash position is and what the effect of it is going to be over a longer period of time rather than what's happening in the next week or so.
And again, we've talked about having an open, transparent conversation with your customers. This is where the open relationship with your suppliers comes in. You might need to start to renegotiate different supply terms. You might need longer payment terms. You might need to speak to your bank and refinance. If you've got an overdraft and it's expensive, shift it to a loan. Look at things like invoice financing. Look at, on a smaller scale, you might think, well, I don't want to do that. I don't want to invoice factor all of my invoices, but I wouldn't mind offering payment terms to my customers. So there's things like iWalker Pay, which is a really good thing to basically offer credit to your customers, etc. You've got to look at different ways to try and get money in.
Mm-hmm.
You might move from once a year service to people to a monthly subscription service. And often if you do that, you can spread the workload and just change the way things work. So there's loads of different options.
Mm-hmm.
But if you haven't got an idea of what your current numbers are, you're just guessing, aren't you? If you think, I'll move there, well, what's the impact? Who knows, but it'll be all right, I'm sure.
It'll be fine. There's always cash in the bank.
And I think some people have got away with that in the past if they're in a business where stuff has always just been all right, and it gives people a false confidence that they're actually a master of their business, but actually stuff just went with them. As soon as they hit a challenge, they can crumble, can't they?
Yeah, and we've always talked about this idea of change, and if it's always, sometimes it's chosen, sometimes it's thrust upon you, and when you're actually implementing change yourself, you need to fully understand all of the implications there.
Yeah.
And that
you should
includes
drive the change.
Yeah.
You should be the cause of the change, not just at the whim of change.
Mm-hmm.
Yeah. Probably a better way to say that, but I'm happy with the way it came out. Just as an aside then, just because I like to throw you a curveball, when you're speaking to clients at the minute, Jack, are people positive, negative? What's the mood?
It depends who you speak to, and their natural levels of optimism and pessimism.
So you're finding people on every scale, every part of the scale.
You'd like to think people are cautiously optimistic about things. There's obviously some worries out there about external factors, inflation, legislative changes and stuff like that, where people are a little bit nervous about things. But overall, I feel I don't want this to come back to haunt me and say that COVID situation seems to be improving, and that generally is linked with like consumer confidence, business confidence. So I think people are relatively happy at the moment, but as I said, that's all relative to how positive and negative they feel in general.
It might also actually just be an indication that they aren't aware of the impending doom. They might think, well, I made it through and I got there, but they don't realise they've got 50 grand to repay. Or it might be naivety, mightn't it, or ignorance. But happy fool is happy every day, aren't they? Doesn't mean that doesn't mean they should be happy.
No, possibly not, no.
So which client exactly is a happy fool and Jack?
Name and shame, right.
Just before, for listeners rather than watchers, Jack was looking for wood to touch before there in case you cursed yourself by predicting the end of COVID, weren't you?
Exactly.
Is that what you were doing?
That's exactly what I was doing.
But this isn't wood, so that wouldn't have
Oh, is it not? Oh.
No. But again, we're at a point where I think PMQs yesterday, quite lively for a lot of reasons, but on the business side, the relevant part is, I think, that the suggestion that the end of restrictions is pretty much coming. I know certainly if you look at COVID cases, pretty much everywhere in Europe, being our main comparable types of countries, is still very much on an upward trend, whereas we've been on a downward trend for a while now.
Yeah.
And that's obviously had people thinking, well, that's it, we're through. I mean, it might come back, but hopefully that means most people will have a 2022 where they can focus on the normal day-to-day drama and disaster rather than...
Yeah, we're not saying it's all going to disappear. There'll be something to take over, some other disaster.
So it's interesting because I had a personal... I didn't have a personal trainer, as you can tell, but I had someone who was a trainer in a gym who once said to me something like, exercise should never get easier, because as you get fitter, you should just always push yourself to that 90% mark.
Mm-hmm.
And I think business is like that. I think if you want to get the most out of business, it should always be hard. You should always be on the edge of comfort. You should always be doing something that's challenging, because that's where the rewarding stuff is. People get stuck in a rut. Life becomes too easy sometimes. Everyone wants an easy life, but do you really? I think having a challenge in business is a good thing. So we've had an external challenge put on us for a couple of years, but don't just think, well, I'll just ride this year. Because one thing that is for sure is there's people out there who did make big gains in the last 2 years because they were more nimble than their competitors. They're not going to stop innovating. So, you might think, oh, leisure, right? Well, nightclubs are always going to be open now. But the ones who have innovated over the last couple of years and still managed to put money onto their balance sheets, they're still more nimble than you are, and they still will be this year. So you kind of just think, well, that's okay, we're back then. Does that make sense?
No, it does, yeah, and you're right. If you don't do it, someone else is. And that's going to be to your detriment. So.
Absolutely. So if you think this releasing of all restrictions means, great, we're back, you're probably going backwards if all you're going to do is stand still, because someone else out there is always going to be hungrier and greedier, whatever you want to call it. You might say, well, I don't want to be that hungry, greedy person. You don't have to be. You can innovate for good reasons, but someone else is going to do it if you don't, aren't they?
Absolutely, yeah.
Right, okay then. So, I don't know what the next episode's on, but we'll release the trailer as soon as we have it. But that was Marty and Jack, part of the Accelerator team here at Robson Laidler. If we've talked about anything that you think, well, that all sounds good, but where the hell do I start? Don't forget, we are still running killer coffee sessions. 15 minutes, we'll chat to you, we'll help you diagnose some of the key things you need to change in your business, and we'll set you off on a template for change. If that's of interest, just reach out and we'll have a coffee with you. Anything else to add, Jack?
No, I'm looking forward to a coffee.
Looking forward to a coffee, yeah. Whet the appetite. Thanks very much. See you next episode.